Good morning, trading world. It is November 16th, 2021, and I'm running late this morning. It's almost 8:45, so I'm going to try to speed through the pre-market outlook this morning. The title, SKEW YOU, waiting, patiently building potential for sell-side activity. All right. As you all know, I have been waiting patiently for the higher time frames to reach levels of overbought. Well, yesterday the weekly finally hit that overbought condition. Now, this doesn't mean that we'll all of a sudden just drop, but it does open the door to breaking out of the range. I want to explain. Overbought is a condition, not a trigger. A trigger is something that I use to validate entering a trade. A condition just means that we're at a level that shouldn't be sustainable or attainable. The word is sustainable that I'm trying to get out, but there's no time frame in which there is to leave that condition. There's a saying, the market can remain irrational way longer than you can remain, solvent. So even though it's in an overbought condition, that doesn't mean that we just all of a sudden it's time to cycle back to the other end, or we just fall. But that condition is a key, especially in what I do as far as watching things cycle. So I've said before, the way that you interpret your indicators, it's more art than science, because everyone has their twist or things that they look for. So this is one of those things that I kind of operate within or use very heavily in the way that I judge things. All right. Now that the weekly has cycled into that overbought level, now I can focus back on the daily chart for it to cycle. What I'm looking for is like a lock cylinder. In order for a key to turn a lock in a cylinder, each pin has to be aligned before that key can turn the lock. Same with the charts. Each time frame has to be aligned before the market turns. Also, I have started looking at the SKEW index again. The SKEW, in simple terms, is a measure of the difference between out-of-the-money put and call premium. It is indicative of big money hedging or preparing for a big move. SKEW gave us a heads up back in June before the July sell-off, so it's worth watching. I'm not sure if we'll reach these record-setting levels that we reached back in June, but we're already in the 140 area in SKEW, and I'll bring up a chart of SKEW. Give me just a second. All right. The purple line right here is SKEW. And as you can see, this is actually the highest level SKEW had ever been. And it gave us a key right before the sell-off that we had in June. Now, we're not quite at those levels, and we may not ever get back to that levels. Like I said, this was the highest SKEW had ever been. But right now, it's time to start looking. SKEW had kind of got back up to a high level, so I look for SKEW to continue its climb here somewhere. And let's see if we can kind of begin. One of the reasons as you can see here, it kind of tipped us off right here before we got the little amount of sell-off activity that we got here. So while I look for the daily to cycle, I kind of look for SKEW to kind of start picking up the pace again, because we're going to have some days here where we play in this range waiting for the daily time frame to cycle. So that's it. Let's get to today's scenarios. All right. The first scenario is a range day structure. We establish a first range high around 467. Then we find the first range low, which could be around 466 area. But don't be surprised if we overshoot down below toward 465 area. I think throughout the day we will push the boundaries higher, lower, one way or another. Remember, there are so many variations to a range day. You must watch your indicators or internals for divergence or convergence. This has a 35% probability of happening today. Again, we establish here, but I'm looking at some point we're either going to push the range lower or push the range higher. This is why it's so important to watch your indicators for divergence and convergence. That is the range day scenario. Scenario number 2, we have a range day rounded reversal, which means from the opening we take off, not looking back until we get to a midday chop area around 468, 469. Could push even higher, but at some point around midday, wherever that level is, we begin to level off into a sideways chop. Watch your indicators or the internals for a divergence. As we chop sideways, your indicator or divergence should go lower. This scenario has a 34% probability of happening today. Let's get to the last scenario. All right, here we have the trend day up scenario, which the closer we get to close, the more unlikely it is to happen. But as you see, what happens here in the trend day up is that we find support around this 467.43, which is yesterday's close. Maybe a little sideways motions until we reverse, going up toward the 469, possibly 470 area. But again, midday, we reach this chop, starting off the second half of the day with a minor pullback before resuming the morning trend. So that scenario, I gave a 31% probability of happening, but due to the news of inflation, it kind of flipped things around at 8:30 this morning. So it's kind of clouded up the view, but these are still the 3 scenarios to look for. You can differentiate each scenario. You can close or count out the trend day up scenario if we break well below the 467.43 area. We can discount the range day if we do not take off up at the opening. So that's pretty much how we can kind of differentiate. It's always easier if you kind of have an ideal and know what signs to look for. It makes it so much easier to operate within the day when you have certain keys to clue off of. And that's how I trade. So hopefully this helps you. As always, know your risk, and wishing you a successful trading day. Have a great one.